OpenDoor Technologies reported their earnings, and needless to say, the earnings were very dismal. And on the news, price gaps down and has broken the up trend line. On the weekly chart, the week is going to end with a very bearish engulfing candle. However, there's good news. There's a level of interest to go long. But before we get into that, let's get into this article. This is coming from The Motley Fool, why OpenDoor Tech stock was falling today. Shares of OpenDoor were having a rude awakening this morning after the home flipping specialist gave a disappointing second quarter earnings report. As the housing market has slowed substantially, OpenDoor's revenue has fallen sharply as well. Revenue in the quarter was down 53%, to $1.98 billion, which was still better than the consensus of $1.84 billion. Homes sold fell by nearly half in the quarter, while homes purchased was down 81%. CEO Kerry Wheeler said in the earnings release, "We exceeded the high end of our guidance in the second quarter as we continue to focus on what we can control and operate with discipline in this environment. Our results reflect the progress we have made in strengthening our offering, driving cost efficiencies, and managing risks." Let's continue with the conversation with Kerry by watching this short video on CNBC.
Half of this year. And I think we got to zoom out, right? What is the problem that we are trying to solve? And just remember it, let's not lose the plot here. There is still a fundamental disconnect in what is going on for consumers in real estate. It is a $2 trillion market that is still 99% offline today.
Right.
We have enormous demand for our product. Customers come to us. We let them sell their home with simplicity and certainty and speed in a way that they can't get anywhere else.
Now, OpenDoor was a huge pandemic winner. The stock once traded at nearly $40 a share, but even with that more than 300% gain this year, it is well off those highs and trading under $4 a share this morning. At the heart of that longer-term decline are questions about the iBuying model itself. It's one that lets homeowners sell their homes directly online, avoiding a lot of the paperwork and costs that traditionally characterize the industry. But over the last year or so, iBuying has become less online and less direct. OpenDoor is increasingly relying on partnerships with agents, home builders, and websites like Zillow to get inventory. So I asked Wheeler if that defeats the original proposition.
But for some agents who are managing a book of business, multiple clients, sometimes it actually makes a whole lot of sense for a client to skip showings, skip doing repairs on spec, skip the time and the delay and actually figuring out whether their home's going to sell. And we can give that to them. And if that agent decides that that is the best thing for their client so they can focus on getting them their next home, we're delighted to be there to help partner on that.
Do you ultimately want to eliminate the agent, right? Because that seems like the most simplicity, the most certainty for the seller if you can do that. So what happens to the agent sort of in the longer term?
Yeah, for us, we want to meet the customer where they are, right? I mean, the job to be done for the customer is help me sell my home in a way that is most effective for me. And if that means they come to us directly, delighted to do that. That's obviously our core value proposition to consumers. If they happen to come to us at some point via an agent and the agent decides that, listen, this is actually the better route for my client for whatever reason, we can facilitate that too. So we're really not meant to, we're happy to partner with agents. We're not anti-agent.
All right, so here's the level of interest for me. Let's go to the weekly chart. And we have a rally in price, a basic candle rally out. That's the level that I am interested in. And that's going to be at the round hole psychological number of $3. And let's put a label in there. We're going to call that weekly buyers. At $3. Let's scroll down to the daily chart. Yeah. There's a lot of basing candles, but that's okay. Volume going out was decent out of the zone. So you had a legging candle, multiple Facing candles and a rally out, a leg out. If you look to the left, you have a pivot high, which should serve as support because it was previously resistance. I like the level. Let's see how things pan out over the next couple of weeks. Let's see if price can continue to move down. Look for buyers to step in at the $3 level. Thanks for watching. Subscribe. Please like the video.